Investors chasing cash flow love to bash California sometimes, but who really gets the last laugh at the end of the day? Hey, I'm Dan Beer with Beer Home Team here at eXp Realty, having a conversation this past week that I wanted to bring forward and share that conversation with you. So I was having this talk with somebody who likes to invest in markets like Georgia, Florida, different parts of the Southeast. And the reason for it is because he was just celebrating how sometimes he'll get 8, 9, 10, even sometimes as high as 12% cash on cash returns, while those cash on cash returns, and I'll explain what that means, are uncommon here. In fact, 12, forget about it. You're not going to see them here. Here you might see 4%, 5, maybe 6, but who really is earning the most money? So a cash on cash return just means for the dollars invested, what is the return on a yearly basis on the dollars in, not necessarily the value of the asset, but on your down payment, or if you bought cash, then yes, the value of the asset. So he's right. When it comes to yield, if you're just purely cash flow focused, he's absolutely right. There are better cash flow markets than this one here. But let's say that person had bought a $500,000 property in one of these markets. Well, out there, yes, they're enjoying maybe 4 or 5 or 6 additional percentage points on the yield, or in other words, the cash flow. But that property, say 5 years later, might be worth $550, maybe $525. In other words, not a lot of appreciation. While the person that bought in a place like San Diego at $500,000, maybe that property was only yielding 4%, 5%. So they're giving up a little bit in that way. But that $500,000 property suddenly is worth $650 5 years later. Could be worth more depending on, we've seen properties double in that time frame. So at the end of the day, if you look at the total return, not just the cash flow, but also the appreciation gained, the California investments, Southern California investments, and God knows San Diego investments absolutely outperform the vast majority of the market, and especially those high yield markets. In fact, it is in those high yield markets that they have to offer the cash flow because the underlying asset just doesn't have the potential and the value that we do here. So make sure you're looking at the full picture, and if you want me to dig into any of that as it relates to an investment you're considering, just shoot back an email. I'll be right with you. I'm Dan Beer. I'll see you on the next one.